What's up, guys? We're back with another video. This video is going to be about risk management. Hope you guys enjoyed those other videos. This is episode 7. Hope you guys are enjoying the series so far, but let's get into this video going over risk management. This video is going to be about risk management. For me personally, I take one trade per day. That's just based on my rules. I trade US 30 and only US 30. And if there's no trade set up, I'm not going to take a trade. So if I'm comfortable with taking that trade, if there's good price action, good volume, I'm going to take that trade. If there's a good quality setup that I feel is A plus, I'm okay with putting this amount of risk on the table. For me, right now I have 50K funded that I mainly trade, and I'm risking $300 of that. So that's a little less than 1%, but the only thing is, why I'm risking $300. I'm okay with risking 1,000 to 15,000, 1,500 is what I used to risk on 100K accounts. With a Forex prop firm though, this is futures now, and the drawdown is so much tighter. With futures, with a 50K accounts, only a $2,000 drawdown. With Forex accounts, prop firms, it used to be when I traded it, it was, I think, 10%. So $10,000 drawdown, or $8,000, one of those. But I was okay with risking 1,000 to 1,500. So now, since there's only a $2,000 drawdown you can hit before blowing the funded, I'm only going to be risking $300. You can risk more, you can risk less. That's just what I'm personally using right now. And that's also going to be spread out across 5 accounts. So that's quite a bit. So if I were to hit a 1 to 2 across 5 accounts, that's $3,000. So that's pretty solid. So let's get into this. The risk tolerance is based on how much you're willing to lose on the trade. That's how you want to go into it. So if you're okay with losing $100, if you're okay with losing $1,000, whatever it fits into your psychology and your emotional attachment to the money is what you should be trading with. If you're getting very emotional in these trades because you have $1,000 risk on the table, decrease that. You can't be comparing yourself to all these other traders that are putting 10 to 40K risk on the table, but they're okay with that. They've been doing this for a long time. So find a risk that you're okay with losing every single trade, and that's okay, that you're going to be okay with taking that loss. Okay, so there's the first thing. Position sizing. Determine the size of each trade based on your account balance and risk tolerance. Kind of like what I was saying. Use a fixed percentage of your account balance for each trade. Mostly traders are using 1 to 3% of your account. So on a $100,000 account, 1% is $1,000, 2% is $2,000, 3% is $3,000. Whatever you're okay with risking, risk that amount every single trade. So another thing is stop loss. You're going to want to set I know other traders don't set a hard stop loss, but if you're new to trading, I totally think you should be doing a hard stop loss, because your emotions and mental psychology is going to be all over the place when you first start trading, because you're like, oh shit, I'm up this. I'm up $200. Oh shit, I'm up $300. Oh shit, I'm down $500. And if you don't have a hard stop loss to when price hits this certain price range, you're going to get out. If you're new to trading and you don't have a hard stop loss, you're going to be like, oh shit, let's just look at this real quick. Your stop loss is there, you're targeting there for 3R. Okay. If you don't have a hard stop loss, so when price comes down to this point and hits that, you're going to get stopped out of the trade. If you don't have a hard stop loss and it comes down there, you have to manually exit out of your trade. But for you new traders, you're going to be all emotional. Your psychology is not going to be the best. And you might be like, all right, I'm going to just drag it down a little bit more. Which, dragging it down is going to increase your risk. And when it comes down to here, it's going to stop you out for more when you could have just been like, all right, I'm good with getting stopped out here instead of all the way down here. You're going to lose less. Yeah, losses are going to happen in this industry. So minimize how much you're losing every single trade and have that hard stop loss. With take profits, you want to set take profits. So when it hits this point, let's bring this back up. So if it were to hit this point right here, you're going to get stopped out of the trade. Say there was liquidity right here where you were targeting a resistance zone, reversal zones, things like that. I'll get into that in another video, but you want to make sure you're at least targeting a 1 to 2 R. So if you're risking $1, you're going to make $2. Things like that. You can go for 1 to 3s, 1 to 4s, 1 to 5s. My max take profit is a 1 to 5, but on average, I'm usually going for a 1 to 2 to about a 1 to 4. That's my main average, right around that range. Yeah, there's some days you're gonna hit those 1 to 5s. Yeah, some days it's gonna go past that, but be okay with taking at least a 1 to 2 R. Don't be greedy. Greed driven traders it's terrible. You do not want to get trapped in that cycle. You need to be okay with, if you're up a certain amount of money, take it. If someone were to hand you a $100 bill right now, you're going to take that, right? If someone in 2 seconds, someone hands you a $100 bill, you're going to take that. Why wouldn't you take that during a trade? If you're up a 1 to 2, if that's with your rules, you're risking $50 and you hit a 1 to 2, you're up $100. Why wouldn't you take that $100? Because you're greedy. You want more. You see, I'm $100 in profit. What if it keeps going? What if it goes to this? What if it goes to that? Take the $100 and be okay with that. So have a good risk to reward. Let's move on. Psychological discipline. Maintain emotional discipline to avoid fear-driven or greed-driven trading. You do not want to have fear driving your trading or emotions driving your trading, because you're going to be doing all this crazy stuff. If you can just look at the chart, know what you're risking, know what you're targeting, and get out when your stop loss is hit or your take profit is hit, you'll be way better off than moving your stop, moving your take profit, doing all these things. It's before you get in the trade, be ready to have your stop loss and your take profit set. You can have runners go after hit your take profit, but you don't have to. I don't do that personally. I take all my risk off the table as soon as my take profit is hit. But you want to stick to a risk management plan and avoid breaking your trading rules due to emotions, because when that happens, say you are only taking 1 trade per day. Sorry, I didn't know I pulled that up, but if your rules say only take 1 trade per day, you take that loss. Then you're like, all right, oh, there's a setup forming right here. It's pretty good. You take it. Take another loss. Even if that setup didn't look good and your emotions are driving your trading, you're going to take it anyways because, oh shit, I'm down. I see a setup forming. It's not the best, but it could play out and I could make my money back. Don't think about it like that. Don't think about the money. Think about building good habits, building good risk management, and following your plan. Risk management is so key in trading. Be okay with losing. If you can handle losses, you're going to be very well off in trading. You're going to do well if you're okay with taking losses and you understand that losses are a part of trading. You're going to do okay. Promise you that. So I just kind of wanted to go over risk management, things like that. So I hope you guys enjoyed this video. Peace.